Heavy is the head that has to manage all of this.
Hey everyone, welcome back to my channel.
We're now incentivized to buy what we already buy.
Fumbling through college had me building.
I also got some done on the other side.
And that was right around, I would say, May, maybe, right before renewing the lease for this property.
Welcome to the channel, Martha.
Thank you for having me here.
Oh, I was going to say, I am getting up there and names, I'll tell you what.
Bills paid by other people, life was never this good. I had to step back.
Hey everyone, welcome back to the channel. So today we're going to talk about one of my subscribers who actually messaged me on Instagram. Shout out to you. Not going to say their name for, privacy purposes. But what they were asking was, what is the best stocks? They said, I am 18 years old. Absolutely love your channel. I watch you on Rumble. I wish it was YouTube because, that's where my biggest audience is starting to come from. But then they asked, I'm 18 years old. I'm interested in stocks. I want to buy and hold long term. They didn't necessarily say they wanted to be a dividend investor like me or a growth stock investor like me. But what they asked for is, hey, I'm looking for some blue chip companies that are really, really good and solid to invest in. Now, the first thing I'm going to say is you're on the right track. When I was 18 years old, it took me maybe about 6 to 8 months before I started looking at blue chip stocks. So you're already ahead of the ball game because you're looking at companies that have already been here long term that are rated A, right? These are some A+ companies. And, that's a great sector to start looking at. But also, I don't want you to forget emerging markets. As a younger individual, markets like Tesla and Netflix, when they first emerged, went up 300, 1,500%, right? So this is a way in which you could have made a tremendous amount of money, been a millionaire overnight, right? But again, we're not looking for FOMO, fear of missing out. We want to stay focused and diligent, but just understand that in these emerging markets, there are some certain companies that are once in a lifetime companies. Once they come, they're here to stay, and you need to be able to identify those as well. But for today, we're going to focus on what this individual was looking for, which is blue chip companies. So the first thing I'm going to do is type in my laptop, blue chip stocks. All right. And then I'm going to go to NerdWallet. I do use NerdWallet from time to time. And I'm just going to do a quick glance at a few of the blue chip stocks that they have out here. So the first thing I see is NVDA, which is NVIDIA. I've heard about NVIDIA. I've had some NVIDIA for some time. Qualcomm is a company that I'm familiar with. I believe that they sell chips. And obviously we all need chip manufacturers. But what do I always tell everybody? Invest in what you know, love, use, and that has a great 5 and 10 year history. And then, that you believe in for their future projections. So that's going to be 5 things, right? I know about Qualcomm. I use Qualcomm, right? Because we use chips. I can take a look at their 5 and 10 years. So let's do QCOM. Their 5 year is up 131%. So what I just told this individual the other day is, hey, if it's over 130% on the 5 year, is more than worth getting into. And if it's down on the 1 year, that means it's at a discounted rate. So the 1 year is actually up 24%. So that's huge, significant gains. Another thing that I look at is their high and low. So their high is 176.97. Their low is 162.69. Now, this is over a 52-week span, right? So basically, it's letting you know that over a 52-week span, the lowest it's been is $162.69 per share, and the highest it's been is $176.97 per share. Right now, as I'm making this video, it's at 165.32, so it's actually closer to the low than the high. To me, this is a good buy, right? It's $11 off of its high for the year, which means if I buy 10 shares of this at about $1,650, it has the potential to go up another $11 per share, giving me what's 11 times 10, $110, right? So I have the potential of making in growth $110 just by putting $16.50 in the stock market. On top of that, it has a dividend yield of 2.7%, 2.07%. So on that $16.50, let's say it doesn't go up at all. In the course of a year, we're looking at $34. Divide that by 12. I'm going to be making $2.85 per month just from the dividend alone, right? So that $1,650 is going to give me $2.80 in dividends per month, right? So a lot of people are like, man, I don't got $1,600 to invest to be making almost $3 a month, right? So the thing about that is you need to start investing where you're at. If you can invest for one share, which is $165, then you would get 2% of whatever that is. It may be a couple of cents, but that will compound and grow over time and add to that investment with fractional sharing, right? So for me, I'm at a point where I now invest every single month what I used to have as my entire portfolio when I was 18 years old. When I was 18 years old, although I had $10,000 saved, I only invested about $2,000 when I first got started out. And so I really had to really choose these companies very strategically. What companies am I going to invest in? What companies have everything that I'm looking for? And to be honest, guys, Qualcomm was the first company I picked. I was so looking to say that I wasn't going to buy this company, even though it was a blue chip stock. But it looks fantastic right now. It looks like a fantastic buy. And so, you know, I'm not your financial advisor. I'm not telling you what to invest in. But what I will tell you is that I now need to do more research on what they plan to do in the future, right? Because it's off of its high. So it's $11 off of its high. I need to know why. Why did people sell it off? Why are people selling Qualcomm right now? Why is it so heavily discounted? Is it a discount or is it priced right because people are selling for good reasons? So I'm looking at CNBC. It says Qualcomm beats estimates and phone chip sales are up 12%. That looks like good news. And then let's see, earnings today, AI phone growth may not hit. Okay, that's most companies. They're not hitting on the AI technology right now, but they're investing into it so that in later years they will receive that growth. I honestly believe that those companies investing in AI, somebody's going to be successful. And so I'm going to spend a lot of my time digging deep into what companies are invested in AI and what company I personally believe is going to succeed with their AI, right? Facebook is investing billions of dollars into AI. But just because you're investing billions doesn't mean that you'll be the one to succeed. Sometimes it's the smaller players within the family that decide to emerge victorious because they're more focused, they're more dedicated, they're not taking any days off, they're hyper focused on completing this project. That was Tesla when they first got started. And now I think Tesla is starting to actually let their gas off of the pedal. They're no longer the only electric vehicles in the market. They're no longer trying to solidify themselves. They're fairly established, right? And so there's not as much pressure to do what they've done. Elon Musk is still trying to apply that pressure on them, but a lot of people are starting to feel that relaxation, right? That's what I kind of think about Meta. I think Meta is too relaxed. Yes, you have these billions of dollars to spend, but you might not be the one to innovate with the AI and everything else. And that's saying something because I do own a lot of Meta stock. I do own a lot of Facebook. And so that's saying something coming from me because either way, whether Facebook or Meta innovates and finds out what they're looking for with AI, I know that they have the money to get or to lease it out in order to improve their brand, in order to improve their visual reality space, digital reality space. And so regardless, Meta is going to be a top company because they now have the funds in order to stay afloat and to stay back. So if you're looking at companies like Amazon, Google, Meta, these companies are really too big to fail. They're going to continue to monopolize the industry. They're going to continue to have demand, but you really want to be driving in on who is going to be a leader in AI. Qualcomm has the potential to do just that, but I'm going to have to do a little bit more research to see, again, why did it drop $11 even with a positive earning report? And then what are their plans for the future? I love their 5-year. I love that their dividend is over 2%. I love that it's close to its 52-year low, which means it gives me a chance to ride that growth all the way to the top at $16.50, right? And then it's going to go up to about $1,800, still at a 2% dividend. That's free money for me on top of a higher dividend payment because of the growth. That's why I like growth dividend stocks, because it's going to grow in its dividend and it's going to grow in the stock as well, right? So that dividend at 2%, imagine now I put 1,600 in and it goes all the way to 2,000. The dividend is still 2%. I'm getting 2% on $2,000, but I only put 1,600 in. That is what I love about dividend stock market investing. You can put 1,600 in, but be getting $2,000 worth in dividend payouts. So that's what's been happening over the last 8-9 years for me, is that when you invest for the long term, I might have bought Meta at $150, but now that it's at $250, I'm getting $100 worth of dividends that I didn't even have to pay for, right? That's what I love about dividend market investment. Sorry, the mailman was just coming through, kind of confused me a little bit. I'm like, who's coming at the door? Anyway, I really wanted to get into more stocks today, but we're already at about 12 minutes. So I hope that this was very informative for you all. And I hope you really, really do appreciate this. Like it, comment, subscribe below if you want me to go over a lot more stocks than just one company. I swear I really wanted to go over more companies. I saw Chase Bank here, which is JPM. I do have some Chase stock, but I didn't get to go over it today. Again, I like to keep my videos at around 10-15 minutes. So Qualcomm, that's the stock that we went over today. Let me know if you are particularly interested in Qualcomm. If you're interested in a different stock, let me know in the comment section down below, and I will see you on the next one. Peace.